Everyone thinks bull markets make people rich. But here's the truth. Bull markets make more people poor than crashes do. Yes, not during fear, but during excitement. And if you don't understand this, you might be the next victim. When markets rise, logic falls. Prices go up. Confidence goes up. Risk goes invisible. Your brain starts whispering, "See? You were right." And that whisper is dangerous. In bull markets, people don't lose money because they are stupid. They lose money because they feel smart. They stop researching. They stop managing risk. They stop questioning trends. They follow momentum, not strategy. This is called overconfidence bias. When your recent wins convince you that you cannot lose, you increase leverage, you ignore warning signs, you double your position, and you smile while doing it. But markets don't punish ignorance immediately. They reward it first. And that reward feels like validation, until one red candle wipes out 6 green ones. Smart investors don't survive bull markets by chasing profits. They survive by controlling emotions. They rebalance. They reduce weak assets. They lock partial profits. Because they know excitement is more dangerous than fear. The real skill in investing is not predicting the top. It is surviving the cycle. Because markets move in waves. And those who protect capital control the future. If you want to grow wealth in 2026, stop trying to look smart. Start managing risk. This is not about hype. This is about discipline. I'm Bella, and you're watching Money Mind 3D, where we don't chase trends. We understand them.